Hello, everybody. Christina Lynn here, coming to you from Sioux Falls, South Dakota. Today, I want to talk about why it's important to diversify. I feel like that term is really thrown around a lot in terms of investments. And I think a lot of people just say, oh, yeah, I get that, sure, uh-huh. But they don't really understand why it's so important. So, in a second here, I'm going to show you a little graph that came from the John Hancock website. It's a mutual fund. It's not particular to their mutual fund. It's just about why it's important to diversify in general. And I'm going to show you, like, walk you through a little illustration about how diversification affects your investments long term. And I think it's really helpful to understand why you're investing your money the way you are and why you shouldn't have all of your eggs in one basket. So here we go. All right, so here is this illustration that I was talking to you about, and this is just for illustration purposes only, and the source came from Morningstar, which is a really great third party that rates and talks about mutual funds. So here we go. Looks kind of overwhelming, but we're going to walk through it. So it's organized by color. So if you're colorblind, it's not going to be as easy. But let's take, for example, let's take this US small cap here, and it's in the gray, for example. So if you were to have invested in only US small cap starting in 2008, let's track it through the years. So it ranks it ranks from best at the top to worst. So in 2008 it was right in the middle, and then in 2009 it stayed in the middle, and then in 2010 it jumped up to the best ranking, and then in 2011 it fell to the second to worst. And then in 2012 it jumped up back to closer to the top, ranked the third. 2013 went up to the top, the best ranking one for that year. And then in 2014 plummets to the bottom. 2015 sweeps the floor at the worst ranking one. And then 2016 is back at the top. And so you can see that it's just bloop, it's a roller coaster ride. So and that's really where investments don't do, it's harder to drop so suddenly, not only numbers wise, but psychologically. It's hard on an investor to have those huge gains and then huge drops. And just for fun, let's look at one more. Let's look at the mid cap one. So again, in 2008, you're starting at the near the bottom, ranking at the, number 2 to the worst. 2009 it ranks the best, and then 2010 dips. 2011 near the bottom again, and then it goes up steady for 3 years in a row, and then dips again for 2015. And then back up in 2016. I feel like a sports announcer. I never thought that would be me, but there you go. And now, finally, we're going to look at what a diversified portfolio would look like. And that's if you mixed these different types of mutual fund classifications together. And it just is, and that's the navy blue here. This is that green line. And what that is supposed to reflect is it just gives a little bit smoother transition from year to year. So it still follows, the trends, like how things are jumping up and down. It doesn't give you, perfectly steady, but it does even out the roller coaster, which really helps, not only numbers wise to avoid those huge falls, but it helps psychologically to not have to go through those huge, the huge bottoms that you'll see in other, if you're not as diversified. So here, 2008, I'm just going to kind of show you because you can see it yourself, but it's a little bit hard to follow the graph. So that's what that graph means. And my last point about diversification is we are only looking at mutual funds here. which in and of themselves are already diversified because you're taking a group of companies that represents like the US small cap or the US large cap, um, and putting them together. So you can imagine how wild that roller coaster would be if we were talking about just like one individual stock. So I think it's my point is there's a real value to mutual funds because you're not only diversifying in terms of you're getting lots of companies to kind of spread out the risk between, but you can also diversify between classifications of mutual funds. You can just wanted to point out that it really does help to diversify, and I hope that this little educational piece made your investing outlook a little brighter.